Hey guys, welcome back to the channel. Today, we're going to discuss a few specific option plays with a screen share on technicals and strikes for stocks I believe have good upside after the stock market correction. By the way, this is a good time to track my scaling with spreads 7K to 17K challenge. Despite the market correction, as you can see, I've been selling iron condors and spreads successfully. Currently have made $1,645 profit, beating the market by a wide margin. That's roughly 88% annual returns, and now is the best time to double a small portfolio when everything is on sale. The first link below is an application to the private Discord with live coaching. If you're a fit, you can book a free call. All right, now let's discuss the first stock and get right into it. Given the rapid pace at which sales of electric vehicles are rising and NIO stock falling, I'm starting to get bullish on two different strategies. One is selling puts and the other is selling covered calls. I wouldn't shy away from putting my money on an EV stock during a market sell-off because we've seen time and again a fast U or V-shaped recovery. Specifically, there are three reasons why I like NIO. First, NIO is a bet on the world's largest EV market, China, where demand for new energy vehicles is rising fast. I'm really interested in the Chinese economy, and I believe it's going to dominate the world in terms of size. They have a very healthy middle class, and their GDP per capita continues to grow much quicker than the US. NIO is also making an effort to establish a footprint outside China, which is my second reason to be bullish on the stock. For example, NIO plans to expand its presence to 25 countries and regions by 2025, with immediate plans including entry into more European markets after having already launched its vehicles in Norway last year. I caught NIO at $4 per share and again at $19 per share. I had to sell off the stock at mid-30s, but seeing NIO basically at 20 bucks, I think it's a steal. I know many have said that they can't trust China. I personally think it's hard to trust anyone. Taking calculated risk will pay off. Last but most important, NIO is gearing up to start deliveries of two models this year, its flagship sedan ET7 and its much awaited midsize sedan, the ET5. There's much more going at NIO, including a potential secondary listing in the Hong Kong Stock Exchange or perhaps even Singapore, as rumors are floating right now. Electric vehicles are changing the dynamic of the auto industry, so it makes sense for an investor to own some EV stocks. Now let's jump into my screen and look at different option strategies that I would run. All right, so let's take a look at NIO stock. It's almost up 8% this morning, and that doesn't surprise me because again, I believe this stock is trading for a huge discount. Now taking a look at the technical chart, this stock was trading for $45 1 year ago and has traded lower and lower since. Basically, this stock had a lot of consolidation around the 38 level, which is where I think the fair value of NIO really lies in the next 12 to 24 months. However, of course, the stock has sold off due to China fears. This is not due to NIO's business. This is mainly due to China fears. The same thing happened with Alibaba stock. In the recent market correction, the stock has sold off from about a $30 stock down to a $20 level. This is where I think it really makes sense to start adding to a NIO position because NIO just looks really undervalued. Now, I also mentioned that many stocks are going to encounter a U or V-shaped recovery. It looks like NIO is already starting a U-shaped recovery. Now, if you notice the RSI is also currently sitting at 33. Around 20, this is very oversold territory. 33 is still oversold territory for me, and I think anything under 40 is a good indicator for a stock that has a lower RSI, which means it has potential to move higher. Now, the Bollinger Band average is 27.8. This is a very important indicator that I like to look at. I believe most stocks are going to trend around their Bollinger Band average. Third indicator I look at is the moving average. Now, whether you look at the moving average or the Bollinger Band average, NIO is trading below both. The moving average is 31.61 and the Bollinger Band is 27.80. NIO is currently trading for $22. I believe in the next week, the next 2 weeks, that NIO is going to recover around the $25 level, if not go back up to $27, given the market performs pretty well. With that being said, what I'm going to show you is a few different option strategies. Now, the first one is called a covered call. This strategy is very good for investors that believe a stock is going to rise and they already hold NIO. Now, if you don't hold a stock, you can still purchase a stock and create a covered call position and start generating income in a few minutes. So step number one for doing a covered call is you need to own 100 shares of stock. Now, if you can't afford 100 shares of stock and you have a small portfolio, my next strategy is going to require you to have a lot less capital and you don't have to buy 100 shares. However, for this first strategy, you need to own 100 shares of NEO, whether you already own it or you're planning to buy it and ride the stock higher. This is where you can use a covered call. So let's say you have just bought 100 shares of NEO at $22.48. Now what you can do, make sure that you're selling a call option. I typically like to go 1 week into the future. So this expiration date is going to be February 4th, which is going to be this week. Now I typically do 1 week options. I also like 2 week options. And sometimes I even like to do monthly options. They're all fantastic for generating income and making money. So what I'm looking at right now is a strike price to sell. Okay, you can technically sell the 23 strike price right here and make some good money because the stock is below $23. So you will leave yourself some room for the stock to appreciate in value, but you're also going to collect $87 worth of premium. Now this is actually very, very big because 1% of $22 is 22 bucks. So this actually right here represents about 4% return in just a few days while also giving you some upside potential. Now I believe that this is a fantastic trade because obviously 4% in a week is 16% a year, which is going to be roughly 200% per year in your portfolio. So you can basically triple your portfolio if you're able to continuously do this strategy week in and week out. Now, obviously this assumes that the implied volatility is going to stay high. As you can see here, the implied volatility currently for NEO is 105, which is something that I have not seen for a very long time. It's typically around 60 or 70, but currently it's sitting at 104/103 because of the general market right now. The market is super volatile, which is actually a very good thing if you're looking to sell options. Now the option delta right here is 0.48, which means there's a 48% chance of NEO reaching $23 per share. So looking at the delta, looking at the implied volatility, these are two good things. And the volume is also very, very healthy at 6,700 or actually 6,800. As I speak, this number continues to rise. It's a very healthy number. And then again, looking at the bid and ask spread, this is another factor that I look at, and the bid ask spread is very tight, which means that this is again fantastic option to trade. So this is an at the money option. This is what I would consider an at the money option because it is so close to the current strike price. However, let's say that you're betting on NEO stock going up to maybe $24 or $25 per share. Well, what you can do is you can go a little bit higher and you can look at the 25 strike right here, and you can look that the premium has actually gone down. That's because this option strike is farther out of the money. It's not as close to the current price of NEO stock. However, there's a benefit of selling more out of the money options. The benefit here is that selling a 25 strike option is going to give you more room for upside. So if NEO stock ends up rising, which it currently is, up to almost 9% on the day, as I'm talking, I'm losing money, but that's okay because I'm doing this for all the subscribers. So if the stock were to go up higher to maybe $25 per share, you're going to see a lot more capital appreciation as opposed to selling the 23 strike. In fact, you can make up to $200 more because you're not capped at $23, you're going to be capped at $25. Again, though, the trade-off is you're going to be making less premium. However, the premium right here still accounts for about 1.5%. So whether you choose a 23 strike or the 25 strike, a covered call is a great strategy to run on NEO stock or any stock, because obviously I'm not a financial advisor. You want to pick a stock that's going up. That way you can benefit from the rise in the stock itself, as well as collecting premium from the option. Now, I did promise that I'm going to show you a strategy that does not require 100 shares. Now, selling put option does require a lot of premium because you do need 100 shares of collateral. However, I can show you what a put credit spread looks like. Now, simply said, a put credit spread is a really good strategy because it requires very little capital to invest in a stock and see pretty good premium come from it. So again, let's say that we're bullish on NEO, which I am personally. Now, what you can do is you can sell a 22 put. Selling a 22 put means that you're required to have 100 shares or $2,200. However, this is what a put credit spread is, and this is what a put credit spread does, is it reduces the capital required. Rather than selling just a put option, what you want to do is you want to click buy. Now you want to buy a put option below your strike price currently to protect yourself and also reduce the amount of capital that you have to put up. So check this out. I sold a 22 strike. Now I'm going to buy the 21 strike. I'm going to pay $36. However, you will notice here that I'm still collecting a total credit of about $29. That's because the 22 strike has more premium, and that's the strike that I'm selling. Now I'm buying the 21 strike to protect myself and create a spread. However, the premium here is much much lower, which means that I'm collecting a total credit. I'm actually going to collect some money here for opening this position, and my total max loss is actually only going to be the difference between this $22 and this $21. So if I scroll down right here, you will see that I'm collecting $30 and I'm risking only $70 because the $100 that I'm risking is actually being compensated with the $30 that I have collected. So now this is a near 50% return in one single week, and you're only putting up about $70 worth of risk. Now, if NEO stock remains above about $22, you're going to make the entire premium that you're collecting, which is the $30. Now, your break-even price is $21.71, which is actually very nice because it's significantly lower than the current price of NEO stock. This is called a put credit spread, and I have a video for you if you want to check it out in the description. Next stock that has great options to buy and multiple strategies I'm looking at is Palantir. The 6-month performance of Palantir is ugly. The stock is trading for 50% off its price 6 months ago. The company had a market valuation of $50 billion. Now the market cap is $25 billion. Their earnings are coming out in 2 weeks on February 14th. The low analyst price target is $15 per share. That's a 17% implied upside based on the most bearish analysts out there. Main reason Palantir is likely to rise is their competitive advantage in the market. Palantir stands out by analyzing and proposing possible artificial intelligence driven decision scenarios based on data gathered from diverse sources. It started in the government realm, where its Gotham software has helped both the US military and law enforcement agencies maintain peace and order. It later added the Foundry segment to bring this technology to the commercial sector. It has become the fastest growing part of the company, as the customer count grew 46% quarter over quarter in the third quarter. Clients have applied this technology to issues as diverse as cancer research, global supply chains, and fighting against money laundering. The revenue growth is also something I'm paying close attention to, which is going to influence the option strategies I'm going to show you. The big data industry has generally benefited from rapid growth. Valued at $198 billion globally in 2020, it's estimated to reach a size of $684 billion by 2030, a compounded annual growth rate of 14%. Palantir seems to have far exceeded that growth rate. For the first 3 quarters of 2021, the company reported revenue of just over $1.1 billion. This amounts to a 44% increase compared with the first 9 months in 2020. Palantir predicts 40% revenue growth for the end of fiscal year 2021, while analysts believe that this will slow to around 30% in 2022. Nonetheless, revenue growth should remain strong as both government and companies seek to help solving problems with data. And I believe that Palantir is trading for a huge discount. So let's take a look at option strategies together. All right, so the next technical chart that I want to look at before we look at the options is Palantir's technical chart. Now, this stock was a $28 stock. You have seen that I have drawn this trend line going lower and lower based on this peak, this double peak actually, and then the stock just completely breaking down over the past 6 months. Now, recently Palantir has had really good support at the $18/$19 level, but with the recent market correction, now it's trading for $13.50. This stock actually bottomed at around $12 per share, which is pretty insane because it's about half of where the stock was trading at about 6 months ago, or even about 4 months ago. Now, the stock is also showing a U-shaped recovery. I mean, this may be a V-shaped recovery, I'm not sure yet. And again, the 2 different analysis that I look at is the Bollinger Band right here at $15 and the moving average of about $17.74. I think that Palantir has about 20% upside, or roughly going to be about $15 per share. And let me show you how I would be playing this stock using options. By the way, if you want to sign up for Robinhood, I have a link below where you can get some free stocks, and my link has been pretty successful for people getting a share of Apple, Nvidia, or Google. So I'm going to show you 2 different strategies. The first one is selling a put option. I wanted to show you a selling put option example on NEO. However, I promise that I'm going to show you an example where you can use a lot less capital. However, for Palantir, the stock is only $13 per share. So selling a put option at $13 per share is only going to require you $1,300 in capital to collect $35 this week. Now, this may not seem like a big return. However, if you do the math, it's nearly 3%. Again, if you're able to collect 3% per week, that's going to be 12% per month, and 12 times 12 months is 144% per year. What selling a put option does is it gives you the opportunity to buy Palantir stock at $13. Now, only 2 things can happen. If Palantir ends up below $13, you have to buy Palantir for $13, which shouldn't be a problem because that is going to be a value price for the stock. Again, you don't have to use Palantir. I'm just telling you how I'm thinking and how I use options to get into stocks for a lot less price. Now, if Palantir does not go down to $13 and it stays above, that's totally fine too. you're not obligated to buy the stock, and you're just going to collect the premium of $34 per share. And then once this option expires on February 4th, you can do this again. So every single Monday, you can do the strategy again if every Friday the stock expires out of the money. That's what a lot of my students do in the private Discord. They're selling options, they're collecting income, and then at the end of the week, the stock usually does not dip below their strike price. So they're just running this strategy every Monday, and every Friday they're just smiling and making sure that the option expires out of the money, and then they do it all over again every single week. This is how my students are creating weekly income. Now, another strategy is simply going to be a covered call again. However, it is pretty interesting on Palantir. What makes Palantir really interesting is the stock is very cheap, so it's not hard for you to buy 100 shares of this stock and then sell a covered call option, whether that's at the money. Again, it could be 13.5. However, what I'm specifically looking at is the 14.5 call option. That's because there's a really easy $100 worth of upside here for the week, and there's exactly 1% premium here in the stock. So it looks very attractive to me where I can make 1% a week, which is, by the way, one of my biggest goals. I'm trying to aim for 1% a week in my option portfolio. And $100 is just really good gravy on top because the stock moves up to $14.5. You'll sell it at $14.5 this week, which should be a very fast gain. That's going to be roughly 7 or 8% return. I'm doing the math in my head. However, you can see that that's a very big return in a very short amount of time. If you want trades like this, if you want to see me buy and sell things with signals and get my live coaching Mondays and Wednesdays, you can submit an application below and join the private Discord community with me. Thanks for watching.